Good morning and welcome to Join the Dots. I have to say that I've got, I think, an incredible week for us this week. I think there's so much happening. As I gave in yesterday's presentation, there's just so much now that is becoming not so obvious that it can't happen, but just, honestly, it's just so obvious. And if you just join the dots, if you can just take the time, think, watch some videos, listen to the words, understand the ability and experience of those talking to you, so much is becoming obvious. So, first 2 minutes, I'm going to talk about Greg Manorino as usual. I've got a video from Greg here. I'm going to link it. Now, I know that only, 25 of you probably have signed up to Greg. I do not earn any money from Greg. I don't even talk to Greg. I just regard him as an exceptional analyst of this world's markets, particularly US based, okay? He is an exceptional analyst with incredible skill, incredible experience. He also gives those who do sign up a lot of trades, 3, 4, 5 a week. He just sees them because that's what he's good at, probably where he makes most of his money. So I know 25 you're watching. I think it's, $3 a month, $30 a year. I've signed up. It's the only subscription I take, the only one. And I didn't get it free because I signed up before I recommended all these people. I keep getting emails from him saying it'll be free now. Anyway, so watch that Greg video if you've signed up because it's just tremendous. The second link I'm going to give you is a very short video by Mike Maloney. And it's the madness of crowds, which I think is brilliant because no one was buying silver at $30. But when it reaches 100, believe me, they'll be piling in. We've seen it, haven't we, in everything. We've seen it with any boom. We've seen it with Bitcoin. We've seen it with anything that people can't be bothered to take the time to understand before the boom starts, but will pile in once the crowd join the rush. And it's a super little video. It's only a minute long. You just have to think independently. You just have to think, listen to the right voices. I hope that you now see that I'm one of the voices that brings you 5 or 6 other voices each day because I'm joining the dots. That's what we're trying to do. Join the dots gives you the knowledge and saves you the time of trying to find all these people independently. I'm bringing them to you. Okay? So, but what I'm going to do today from here is I'm going to talk about a piece that came out of, I think it's Live from the Vault they call it, and it's Kinesis Money, and it's Andrew Maguire. Now Andrew is a very, very solid, experienced, quality, genuine commentator, all right? And he sees that fiat is broken. We all see fiat's broken, we know that. But what he's done is he is an incredibly technical, gifted person to understand the real infinite detail of the markets and how they work and what all these printed reports tell you. And I don't understand them either. I listen to people who do. So he sees a tectonic move as the Fed has no more suppression tricks in the bag. And I totally agree. We are coming to the end of the fourth turning, as it's called. More on that later in the week from Grant Williams. Superb piece. I'm analysing it now. Okay. So evidently a full audit of US gold is now back on the table. Evidently Scott Bessant, and it was printed on the front page and reported by Bloomberg, is now looking at a full audit of the US gold. Something is happening. Something. Now, if the US does not move soon to revalue gold, there just won't be enough bullion to meet delivery demands. That's what delivery obligations, that's what Andrew sees because he looks at the detail, the data every day. He sees that 28th of November could be a massive day, okay? Because that's the December delivery or December cutoff date for delivery in December and therefore the year end and who's going to want gold at the end of this year. Now, what he also points out is something I've said to you so many times. The mainstream media have said, Bloomberg, FT, Wall Street Journal, CNBC, everyone in finance has said that 2,500 gold was overvalued. And here we are at 3,007 almost, which is almost 50% higher, isn't it? They haven't got a clue. Or they're deceiving you. 110,000 at United Britain. Press, trust them, don't you? We all do. Right, so they fail to understand that Comex is now the price taker. Now, for 40 or 50 years, the Comex and the LBMA have been abusing anyone using the market. Abusing them. Time after time after time. And they were always able to because they were the price setter. They ain't anymore. With the advent of gold being demanded by central banks all around the world, India, Russia, China, Poland even, yeah. Okay, with that now, the markets are going to be the price taker. They're going to have to take the price, not set the price. Massive inflection point. Massive. Okay, so a bunch of margin calls coming in for those short this market, and this is why he's looking at November the 28th, and he's looking at the date on which these people are going to have to deliver. Now, delivery is now out. Would you believe it? Delivery should be within 48 hours. At the moment, delivery is 128 days, not hours. So it should be 48 hours. Delivery now is 128 days. Wow. So the central banks are trying to hedge their fiat and bond holdings with gold. Now, this again will come up with Grant Williams later in the week, okay, because it's a superb piece. Those who want safety throughout this fourth turning into the new first turning, they will go for gold, okay, and that's just logical. Remember Exeter's inverted pyramid. Remember one of the earliest presentations I did to you, how people have to rotate out of liquid assets and perceived safe assets, bonds, stocks, property, derivatives, a perceived liquid. It all turns upside down. And those at the top, which were just a fraction of the market, gold, silver, precious metals, critical minerals, become the base. Exeter's inverted pyramid. Go back to my presentation, have a look. It's going to be so relevant. So, and then we see Dalio says 10%, Goodluck says 20%, Mike Wilson of Morgan Stanley says 20%. We know all that. I've given you that over the last few days. Let's have a look what else we got here. And remember, US portfolios are currently 1% gold. So most people believe that the Fed has rehypothecated a lot of its holdings, okay? And that's why we have the non-delivery, and we have the delays on delivery, and we have the delayed audit, because they haven't got it. They haven't got it in their own name and hands. It may be in the vault, but it's not theirs. A lot of it's German. They haven't got theirs back. They've asked for it for years. So 15 minutes, the Fed refusing to allow repatriation of gold by Germany. There we are. I didn't see that before I said it. There is no trust in this system. No trust. And delivery delays of 128 days does not help trust, does it? No, it kills it. It worries people. And why would you be worried about the safest asset on the planet? Something's just fundamentally wrong. All right. So when Germany asked for its gold back, some of it was delivered. Some of it. This is 17 to 20 minutes of the presentation, which I'll link to this. Andrew Maguire, live from the vault. Okay, I'll link it. So when they did deliver, 7 years after Germany asked for it, it wasn't the German gold. It wasn't the same markings. It wasn't the same quality. It wasn't in the same style. In fact, some of it was a mix of 22 and 24 karat gold, but it wasn't Germany's because the numbers didn't match. Okay, trust. So what they managed last time was they engineered a fall of $600 in the spot market, And that, of course, made all the speculators who were in there rush for safety and just give up. And those who were double leveraged, treble leveraged, they just gave up. They had to get out. They managed the crash, all right? But they can't do that this time because the holders this time are not speculators, are they? They're not double leveraged, treble leveraged, no. The ETFs haven't really taken off yet. These are central banks. These people don't panic. These people know an awful lot more than those who are speculating and only see the price in the FT the next day. These people know a lot more. So they can't do it this time, but they'll try because that's what they're used to over 40 years. They're used to doing it time and time and time again, not this time. So it cannot happen now. This is what Andrew says. It can't happen because Comex and the LBMA are no longer control the market. They're price takers, not price setters. So we're at an inflection point for the LBMA banks, and they are the most vulnerable. The Fed is likely the only central bank short of gold. Every other central bank is long, deliberately so. Okay, I'm running on here, I know I am, but this is such an important piece. After 26 minutes, 4 tons had to be squared last time at 160 ounces, $160 an ounce higher than the price. So they lost 25 million. 30 tons remain at over 350 ounces higher, dollars an ounce higher. So that requires a 3.5 billion to be made good. The amounts are just getting stupid, and they'll get more and more stupid until the banks square their positions. But when they square their positions, what happens to the price? There's no more gold, is there? So what happens to the banks? What happens to people's perception of the banks? What happens to the price of gold? Okay. So all central banks, all large institutions, bullion banks and their clients are now looking to buy physical gold. We know that. We'll have the family offices coming in soon. We'll have the small speculative hedge funds joining the party. We'll have them all in soon. It's trebled in 5 years. From 2020 to 2025, it went from 1254 to 37. And they're still not in. They're not in there yet. Okay, and we know the public aren't. I've told you. Okay, so Kinesis estimate at the end of December 25, 4,500. That's another 1,000. That's another 30%. Okay, and the 30 tons short could push it another $500 higher, up to 5,000. So all of this means it would be better for the Fed to revalue their gold sooner rather than later. So we expect that to happen. Now, Mohammed El-Erian, who I've mentioned in my past 20 years of studying this, is the best economist I think ever, around. Very best economist. Used to be PIMCO, then he was Bloomberg. He's head of King's College, Cambridge. He's a brilliant man. And he says now that central banks hold more gold than treasuries. Some central banks. The FT disputed it. They said, no, you're wrong, Mohammed. He proved them wrong again. 110,000 at Unite. These newspapers are garbage. They're garbage. They're lost. They've completely lost the plot, and they try and lose that plot on you, the lost plot. They try and sell the lost plot to you. Don't believe them. Mohammed just killed them. So there's he sees a massive rebalancing happening. 30 minutes into this Goldman Sachs assessment of unreported central bank holdings, 45,000 tons is what Goldman Sachs think is unreported central bank holdings. I ain't going to sell it. I thought it was about 30,000, but Goldman Sachs now say 45. So if the Fed don't act soon, $10,000 to $20,000 gold is a real possibility. This is coming out of Kinesis. This is on the link. I've linked it to you. So listen to the number. Then comes silver. And they see a gold-silver ratio at 33, currently 85. So silver will expand 2.5 times the rate of gold expanding. And I've said that since the beginning of these presentations. So 36 minutes, people are recognising gold as an asset class. Well, yeah, we told you. Dalio, 10%. Goodluck, 20%. Morgan Stanley, Mike Wilson, 20%. Everyone's seeing it. ETF buying is just at the beginning. I'm 15 minutes. I'm being told off. I'm trying to rush this now. 36 minutes, the next revaluation event looms. And that will cause every central bank to chase more gold to replace fast depreciating dollars and US treasuries. Okay, I better end it there because it's a long presentation. There's a bit more to go. I will come back to it. I can't leave you hanging. Well, I will for 24 hours, but we'll finish this off tomorrow. Okay? I've already got tomorrow's in my head, but that's going to be pushed back another. There is just so many dots and they're all joining beautifully for us. Okay? So enjoy your day. Please look at those links. Please watch the video from Andrew Maguire. You will see how credible he is, how detailed he is. He's a technician with this information. Okay? Thank you very much for watching.